Welcome to Trade Finance Talks, a podcast from Trade Finance Global. During this series, we'll be hearing from global experts, as well as learning about the latest trends, technology and insights in the world of international trade and receivables finance. Episode 117.
Unlike a traditional lending relationship, factoring and supply chain finance allow suppliers with weak credit ratings to access funding based on the value of their receivables.
We have a system called Eddy Factoring, and the Eddy Factoring platform has been, let's say, engaged or been used by members since the mid-1980s.
We developed a secured payment scheme, which was also adapted to FCI platform and structure.
Difficulties started just from the beginning of negotiations, as our clients have been working together through the traditional scheme for a long time.
Hello and welcome to Trade Finance Talks. My name is Dipesh Patel, editor at Trade Finance Global. In a world of tightening credit, geopolitical turmoil and aversion to risk, we must admire market participants who are investing in resilience through innovation, collaboration, and breaking boundaries. Now, investing in resilience is this year's theme of the EBRD's annual conference, and TFG are delighted to be partnering with the Trade Facilitation Programme conference held in Samarkand, Uzbekistan. Today, we're talking about a groundbreaking transaction between an Armenian chocolate factory and a Georgian conference distributor when coupled with the support of the EBRD and FCI. Discussing this $1.1 million transaction, we're joined by Tamar at TBC Bank, Angela at Arm Swiss Bank, Peter Mulroy, FCI, and Nana at EBRD. Welcome all to Trade Finance Talks. I'm going to ask you to give a very quick introduction. Tell us a little bit about you. Peter, over to you to start.
Thank you, Dipesh. So I'm Peter Mulroy. I'm the Secretary General of FCI. FCI is a global association of factoring, receivables finance, and supply chain finance companies, banks, non-bank financial institutions, and other, let's say, third parties supporting the industry. We were founded in 1968. We're based in the Netherlands. Our membership is in 94 countries, and today we have approximately 400 members.
Thank you. And we'll be going into the FCI Eddy Factoring program shortly in this podcast. Tamar, over to you.
Thank you, Dipesh. My name is Tamar Gugushvili, and I work for TBC Bank, the largest financial institution in Georgia with the largest market share in factoring industry and trade finance. I'm with this bank around 10 years. Thank you.
Thank you very much. Highly experienced, and the documentary credits, guarantees and factoring are such important components to international trade. Angela, over to you.
Hi, my name is Angela. I'm Trade Finance and Correspondent Relations Department Director at Arm Swiss Bank, which is a corporate and investment bank specialized mostly in trade finance and factoring operations.
Thank you very much. And last but no means least, Nana, over to you. And also, could you talk about the conference as well?
Thank you, Dipesh. My name is Nana Khurodze. I'm a senior banker at EBRD's Trade Facilitation Program. I'm responsible for the program activities in Caucasus, in Western Balkans, Egypt and Turkey. I'm very excited to be here. Thank you for inviting me.
We're delighted to partner with the event at Trade Finance Global. Nana, can you talk about the Trade Facilitation Program and how it supports the development of factoring? And what services does EBRD's TFP provide to partner banks and also factoring companies?
Factoring and supply chain finance are fast-growing sources of short-term financing for micro, small, and medium-sized enterprises. Unlike a traditional lending relationship, factoring and supply chain finance allow suppliers with weak credit ratings to access funding based on the value of their receivables or approved invoices in the case of supply chain finance. The TFP supports the development of factoring through guarantees and cash advances. And of course, a very important part of our job is also to provide trainings and capacity building for the partners and factoring companies. Very briefly, the TFP itself was set up in 1999, and since inception, we supported trade amounting to more than 30 billion euros. Factoring facility was set up a bit later in 2006, and since inception, the tool-supported transaction value stands at around 1.3 billion euros, and the number of transactions stands at 303 until now. So the TFP currently has 16 factoring facilities in 8 economies where we invest. It's Armenia, Bulgaria, Greece, Georgia, Romania, Serbia, Turkey, and Ukraine. And the latest addition was the first factoring facility in Turkey. It was recently signed. Aside from the financial support, as I mentioned, TFB is actively working on the capacity building through online trainings, workshops, advisory services, and also policy dialogue. For instance, our e-learning program provides training to EBRD partner banks on all aspects of the trade finance industry. The introduction to domestic and international factoring course, which we are providing with the support of FCI, teaches partner banks and their clients the basics of factoring and enhances their skills in order to sell, use, and process factoring. So until now, we already admitted 400 students from over 70 institutions in 22 economies where we invest. So aside from that, as I mentioned, we very often organize the workshops, conferences. We bring together industry players. We are also very actively involved in the policy dialogue together with EBRD's legal transition program, which improves the legal and regulatory environment for the factoring services in the countries where we operate.
Thank you, Nana, and some really impressive numbers there. I guess, Peter, as the Beacon Association for Factoring, can you provide an overview of, how FCI supports EBRD through various activities, including the EDI Factoring platform, and why it's important to facilitate these cross-border transactions?
We have basically been working with EBRD for a number of years in all these different areas that she mentioned, including education, supporting the legal framework in these markets. But this most recent, let's say, transaction between Georgia and Armenia, to our members there, was a kind of the brainchild of all these three organizations, EBRD and the two organizations in Armenia, TBC, and of course, Armenia, our Swiss bank. Long story short, before I get into what it is, we have a system called EDI Factoring, and the EDI Factoring platform has been, let's say, engaged or been used by members since the mid-1980s. It was built in the pre-internet era. It went live in the internet era in 2001. There have been upgrades since, and then we just rebuilt it just in 2022. We spent a lot of money and a huge investment from FCI's resources to create a real state-of-the-art, high-secure EDI platform that has modern API interfaces, has the best security aspects, modern look and feel, etc. The best way to describe it is it's a risk distribution system. This risk distribution system is similar to SWIFT in that it's used as a messaging system between financial institutions, our members. Basically, these members will let's use an example. In this case, you have an exporter in Georgia that is shipping product to a buyer in Armenia. And on open account terms, so a receivable is created on the balance sheet of the seller. And that seller wants to liquidate those receivables that are just lying dormant on their balance sheet and be able to raise liquidity, but also distribute the risk, because right now they have risk against a buyer in Armenia. So that's really the kind of value proposition relating to the EDI Factoring platform. It allows the bank in Georgia, in this case, to participate this risk to another entity, in this case, the bank in Armenia, our Swiss bank. It's a messaging system. I think approximately, since we've gone live on the internet, we've had well over 1 trillion euros transactions in the platform. So it's truly tested over the many years that it's been used. It's backed by the GRIF, the General Rules of International Factoring. That's kind of like our Bible, our Quran, so to speak. It guides all of the transactions, but the actual messaging is how the actual transactions are conducted between the two FIs. There are 4 principal, let's say, services that the import factor would provide the export factor, and that is providing the protection, 100% protection against the default or bankruptcy risk of the buyer, of the client's customers, the collection of those receivables in the foreign country, the potential elimination of fraud, because you're not just verifying the invoices and the business on the exporter seller side, you're also verifying the transaction with the buyer, and also dilution, because you are working both sides of the transaction, similar to an LC. The chances of dilution or the risk of dilution lessens because all the parties know each other. And then bring in EBRD. And again, this is really the very first transaction that's taken place on the EDI Factoring system, whereby the EBRD came in with the support of TBC and with our Swiss bank to develop a program that would add an additional layer of security. I think I'll stop there because I think we'll discuss that later. I think Nana will bring that up in a few minutes. But that's it. I mean, that kind of gives you just an overview of it. You can also say it's kind of like a collateral system, because those receivables in essence are like collateral, and they're just enhanced, protected, and ensuring that they're liquidated in the most efficient and the most secure way. Yeah, that's it. That gives you a good idea of how the system and platform works.
Thank you very much. And I think a really good overview, and what a good way to start the discussion about the actual transaction itself. And Tamar, I'm going to come to you from a TBC bank perspective, but also from looking at taking a helicopter view of the transaction. So can you talk about how the EBRD trade facilitation program helped facilitate this first ever cross-border factoring facility between Armenia and Georgia? And what role did both banks respectively play in the transaction?
With the support of EBRD and the CI, TBC Bank and Arm Swiss Bank supported cross-border factoring transaction for the customer's ongoing trade. Transaction structuring was quite challenging, as no precedent existed before, as colleagues mentioned. With the very productive collaboration between EBRD, Arm Swiss Bank, and TBC Bank, we developed a secured payment scheme, which was also adapted to FCI platform and structure. As you know, EBRD TFP program connects with each other different banks from various countries where EBRD can secure paying vessel obligations. And in our case, this bank was Arm Swiss Bank. We have not worked with Arm Swiss Bank before, unfortunately, so we didn't have clean lines prepared on them. And here was the chance for EBRD to step in and for us to make this transaction possible. The full technical and the legal side of that assignment was implemented through the FCI platform and is factoring, adhering to FCI rules. We have not touched the main structure, how international factoring works. What we have done was that Arm Swiss Bank, the impaired factor, issued payment guarantee in TBC Bank's export factor's favor, securing obligations of debtor for due payment of all account receivables assigned to TBC Bank under factoring contract. This payment guarantee issued by Arm Swiss Bank was then backed by EBRD standby LC, which enabled us, TBC Bank, as an export factor to book the risk on Arm Swiss Bank. EBRD's participation is in this transaction in the way of issuing a guarantee because of its credit rating, allowed to incur a minimum cost, and consequently we offered exporter well-structured, effective and low-cost financing solutions.
Thank you, Tamar, and really interesting solution. And Angela, I'm actually going to come to you now. And the transaction was actually between an Armenian chocolate factory and a Georgian confectionery distributor. Angela, how did the factoring solution implemented by FCI's EdiFactoring platform benefit both banks, Arm Swiss Bank and TBC Bank? And can you talk us through some of the challenges that were faced in completing the transaction?
Let me start with the challenges both banks faced through designing and implementing this transaction. Difficulties started just from the beginning of negotiations, as our clients have been working together through the traditional scheme for a long time. They started with 100% prepayment scheme and later on switched to letter of credit. But we were sure from the very first side that the cross-border factoring was the best solution, matching their needs and expectations. At the same time, we were realizing that we should act very carefully, as any change in already working scheme would cause inconvenience for the clients. After several meetings and discussions, we could smoothly change the product. So this was the first challenge. And the next, not less serious challenge we faced was the price. We had to keep the price affordable. And as Tamar already mentioned, the fact that Arm Swiss Bank issued a payment guarantee in favor of TBC Bank, which was backed by EBRD's standby letter of credit, allowed TBC Bank to offer low-cost financing solution to the exporter. I'm sure that we overcame this challenge as well. And the third challenge we faced was transaction structuring, as no precedents existed on the trade facilitation program before. We had to reflect the whole cycle with all participants in our books. So these were the main challenges we overcame and eventually designed and implemented the product successfully. Now turning to the second part of your question about how our banks benefited of this transaction, we have discussed this topic with my colleague Tamar from TBC Bank several times, and I can mention that we, first of all, it was a professional point from the professional point of view. The fact that we found a perfect solution for our clients. Now we are pioneers, as this is the first interregional factoring case on FCI platform where EBRD's trade facilitation technologies have been used. As Tamar already mentioned, this transaction served as a reason to establishing corresponding relationship between our banks. Now we cooperate also in frames of other products. For example, just a few months earlier, we found another case of cross-border factoring, but this time Arm Swiss Bank acted as an export factor and TBC Bank acted as an import factor. Eventually, from financial point of view, I think that the benefit is that both of us increased our portfolios with this transaction. This case is really a very good example of collaboration between all parties, including banks, clients, as well as EBRD and FCA. And I can assure that all parties of the transaction have benefited a lot of it. I'm proud to be a part of this transaction, and I do encourage my colleagues to start using this transaction and offering to their clients.
Thank you very much. Peter, do you have anything to add? The Edifactoring platform, because I know you've quite succinctly gone through those 4 benefits earlier.
Well, the main thing I want to say is that this is the very first transaction ever that a development bank had provided a guarantee, let's say, within the Edifactoring environment to kind of enhance the risk of the, whether it be the country risk or the FI risk itself, whatever the reasons why parties want it, it really enhanced the transaction and made it really so unique. And as a result of its uniqueness and the many benefits that the transaction resulted in, was one of the top winners of the Best Deal of the Year award at the FCI annual meeting in Washington, D.C. last year.
Thanks, Peter. And Nana, from an EBRD perspective, why is this transaction noteworthy? What makes it first of its kind? And what benefits does it provide to, I guess, the end party, which is the corporates and SMEs involved, not just the partner banks?
Peter mentioned it's the first ever time that developmental financial institution has facilitated such a transaction on the FCA's factoring platforms. Only for that, I think that it's already a unique structure. In addition to that, of course, was this approach TFP demonstrated an applicable blueprint to structure cross-border factoring transactions in a challenging economic environment between counterparties which would not otherwise be able to transact with one another, like mentioned already by Tamar and Angela. In this case, sometimes there is no confidence between even neighboring countries. You can imagine that Georgia and Armenia are neighboring countries, but still there is no enough confidence for banks to just transact with each other without MDB guarantee. Another aspect, I think, it's that TFP acted as a catalyst to encourage private sector import and export growth in Georgia and Armenia. And lastly, guaranteed improved receivables and payable cycles for both SMEs involved in an affordable rate. This was also highlighted, I think, by Angela. So TFP is constantly looking for innovative solutions for SMEs. As we all know that financing gap is in this sector. It's large, and SMEs are the most affected by the challenging and unstable environment which we are all facing at the moment.
Thank you, Nana. And Peter, looking ahead and I guess taking a bit of a bird's eye view, do you see more opportunities for multilateral development banks or other development finance institutions to facilitate trade on FCI's factoring platform? And I guess trying to look at it from the other side, do you see any potential risks of such transactions?
To answer the first part of the question, absolutely yes. Again, thanks to EBRD being the first. And, I have to remind people that EBRD also developed the TFP concept. They were the first development bank before the IFC or any of the other regional development banks launched it. So, EBRD is definitely a trendsetter and a pioneer in innovation. So, honestly, we couldn't be happier. But yes, we are actually working with the Afrexim Bank today on a transaction in the Republic of Congo where the buyer importer is located. So, the exporter is actually in Europe, in the EU, in this case, Italy and Spain. And of course, these exporters want protection against the risk in the Congo. So, the Afrexim Bank is looking at establishing a kind of similar, under their TFP program, a similar kind of guarantee structure. We're also working with the Inter-American Development Bank. There is a transaction, the buyer being in a high-risk country today. Argentina, as you know, is going through very, very difficult times, and the exporters in Brazil. And the Inter-American Development Bank is looking at also establishing a kind of a guarantee mechanism under the Edifactoring environment to protect the bank in Brazil and being able to allow them to fund these receivables, which otherwise they would not. They would not be able to get a policy, get any type of protection. So this is where these development programs really come in handy and really make a difference in the structuring, and allows the FIs to be able to, do business in markets, like Nana was saying, in countries that they wouldn't be able to do otherwise.
Thank you very much, Peter. And I guess that really summarizes this podcast. And here we are at EBRD's annual trade facilitation program event as part of their annual conference. And I think really looking at how we can reduce risk risk, where there's lack of confidence in some emerging markets, is absolutely key here. And we need to continue to innovate, not just on the technology side, but on the product side, and actually guaranteeing transactions through programs like the EBRD TFP, combined with the technology and expertise of the FCI eddy factoring platform, really does allow more market participants to take part in international trade, and it's really helping towards inclusive and also resilient growth. So with that in mind, I'd like to really thank our guest participants, our superstars of the show, for this exceptional, groundbreaking transaction. So Tamar, Angela, Peter, Nana, thank you so much for joining us on Trade Finance Talks TV here from Samarkand.
Thank you so much.
Thank you.
Thanks for listening to Trade Finance Talks. Be sure to subscribe to our podcasts at tradefinanceglobal.com.